Hey guys, it's James and I'm back with another valuation video. Today I'm going to be checking out PayPal, or ticker symbol PYPL. Now PayPal has actually tanked here over the past few years, with its most recent 5-year high being around $306, and with the current price being $61. It might seem like PayPal is a falling knife, but I think PayPal has a very strong history behind it, and I believe it's starting to bottom out, and I'm not the only one that is thinking that. There is a few analysts on Seeking Alpha that are rating PayPal a strong buy, as well as some Wall Street analyst ratings, where out of 45 analysts, 21 are saying it's a strong buy, 9 are saying it's a buy, and 15 are saying it is a hold. Now over on the earnings tab for PayPal, I like to look at earnings. Are earnings growing and increasing quarter over quarter? And they actually are for PayPal, at least for the last 3 to 4 earnings reports. The last announcement date, or their last quarterly earnings, was August 2nd, with the earnings per share coming in at around $1.16, and their revenue beat by about $14.9 million. So what did the last 3 to 4 earnings look like? Well, out of the last 3 to 4 earnings, 3 of them beat the earnings per share estimates, and the most recent one was in line. So let's see what the free cash flow numbers look like, and let's see what Graham's model looks like for PayPal. This is my valuation workbook or spreadsheet. I offer this over on Patreon. When you download my Patreon workbook, you can also get these other easy to use calculators with video instructions over here on the overview tab. Now, when I do my valuations, I do discounted cash flow, I do Graham's model, and the dividend discount model, but PayPal does not give a dividend as of yet here in August of 2023. So we're going to leave out the dividend discount model and apply a margin of safety a little higher than we usually do, where we usually apply a 10 to 30% margin of safety. So these free cash flow numbers, we're going to go ahead and use all the most previous full year free cash flow numbers, and then see what the first 2 quarters of 2023 would give us, and then make maybe a little adjustment here for the most recent full year free cash flow, and see how that changes our average free cash flow growth, and then what type of valuation we would get with our discounted cash flow model. Currently, the price for PayPal is $61.19. The recent 2-year chart, you can see PayPal has continued to fall, but it does look like it's starting to bottom out here. And then PE ratio is sitting at 17.09. So these free cash flow numbers, where am I getting them from? Well, usually I'll get my free cash flow numbers over on macrotrends.net. I went ahead and already inputted all the free cash flow numbers for the past 10 years. And then perpetual growth rate, typically we're going to do about 0.5% to about a 2%. And for PayPal, we'll go ahead and just put 0.5%. A discount rate is what you would like your money to receive. What type of increase on your money would you like to receive if you were to put your money in another investment asset? And we're going to say around 8% is a fair number for the discount rate. The cash and debt, where do we get those numbers? Well, if you come over here on Seeking Alpha, and I do have a premium subscription on Seeking Alpha, under the financials and under the balance sheet, I'm not sure if you can see all of the previous 10 years if you don't have a premium subscription, and I do believe I can get you either a 7-day reduced rate or a 14-day free trial for the subscription if you click the link in the description below under this video. We're looking at the cash and equivalents and the total debt for our free cash flow right now. So for December 22, around $7.8 billion, coming down to the very bottom under total debt, around $11.5 billion for 2022. If we wanted to use the rolling 12-month numbers or the most recent earnings report numbers, we can go ahead and do that now. But we're just going to use December 2022. With all that information in the calculator, let's head on to Graham's model. Now for Graham's model, there's earnings per share built into the calculator, and then also a projected growth rate. So where am I getting this projected growth rate? Over on Yahoo Finance, over under their analysis section, coming down to their growth estimates. The next 5 years, analysts are expecting the next 5 years per year around 17% growth for PayPal. So we went ahead and used 17.37. The AAA corporate bond rate is a quick Google, and today it's sitting around 4.96. And then again, PayPal does not pay a dividend as of yet. So with all this inputted into the calculator, let's go ahead and click go and see what type of valuation we would get. With the discounted cash flow, this calculator, or the discounted cash flow model, claims that the valuation for PayPal is around $324, with the current price being $61. So obviously, without any margin of safety, PayPal is an extreme strong buy. And then with the Grams model, based on their earnings per share growth and their most current recent earnings per share report, the Grams model is evaluating PayPal at around $77. Taking these two valuations and averaging them, we get around $201 for an average valuation. Applying a 35% margin of safety, we get a final valuation of $130 compared to the current price of $61, which gives us a buy signal. So there you have it. Head down into the comments and let me know what you think of this valuation, and if you're going to put PayPal on your watch list or go ahead and add some of it to your portfolio. And if there's another holding or listing that you would like me, or a security that you'd like me to analyze in this way, including the dividend discount model, let me know in the comments. And with that, thanks for watching.